What is good, everyone? In today's video, I'm going to talk about a continuation model that I use every single week, and I look for it every single day to day trade NASDAQ. So I'm going to try to keep this video pretty short and simple and try to keep it under 10 minutes. I'm just going to go straight into the information. If you don't know already, my name is Roy. I've been trading for almost 2 years at this point. And this is just one of the models I use to actually day trade NASDAQ. It's similar to my other model, but we're just going to go over this one in this video. So basically what the continuation setup is if you can see on my screen here, we have a clear draw on liquidity. We have a manipulation to liquidity at an opposing area. So here I just marked out some examples. This is just a liquidity sweep. This could be like a session low or high. This could be a previous day low or high, a previous fair value gap that we left that was unmitigated, etc. And then we want to see a reaction out of that and price displace toward our clear draw on liquidity that is aligned with our bias, right? So obviously this is a long setup, but it would be the same thing if you're looking for a short and your clear draw on liquidity, your bias is short bias, right? So all we're looking for here is a combination of a few things. Obviously, a liquidity sweep is our number one. We usually want to see a pretty aggressive reaction out of there with displacement. And if you didn't get an entry here, which in my other model, I would look for an inversion fair value gap here to actually get an entry for a reversal. But obviously that can be a little more risky, especially if you're not sure if this liquidity sweep was really the low. But if I miss an inversion here, or I don't get an entry down here at the reversal point, then I'll look for what I call my continuation setup to still get a trade toward my draw on liquidity. So in this case, we have clear displacement, so that checks out. And then we have a retracement into this 5 or 15-minute fair value gap. It could be either one, but I want to see one of these be created. So it leaves behind a bullish fair value gap on the 5 or 15-minute. Price then retraces into it. And then we get another reaction out of that. And then I'm looking for an inversion out of there, which is just an inversion fair value gap, which means the fair value gap gets closed above. So it completely disrespects the bearish fair value gap that we created in this leg here. We close above it, and then I'll market enter there, put my first target here to move my stop up to break even. So once we hit this line, I move my stop to break even there, which means it becomes a riskless trade, and I'm looking to see my final draw on liquidity up here. Okay, pretty simple. However, this setup I see normally like maybe 1 to 2 times per week. Most of the time I'm able to enter a trade down here, but like I said, this is just going over the continuation setup that I use. So another thing that I want to point out is, if you notice here, I have these Fibonacci levels, which is just 0 to 1, and then equilibrium, and then 0.25, 0.75. Basically, all I'm using this for is I'm pulling a Fibonacci drawing from the low to the high of this trading leg, this original huge displacing move, because I want to see price come into discount of this trading leg if I'm going to long out of it, because you want to get in on a discount. That just, from all the back testing I've done and using this model, if price comes into discount before continuing higher, the win rate is much higher. Because if you're longing in a premium, price could just manipulate you out just by resweeping that low again, and then you'll just get wrecked, obviously. So yeah, usually I want to see a tap into discount paired up with the 5 or 15-minute fair value gap. If we don't have a 5 or 15-minute fair value gap in discount, then let's say this fair value gap was up here and we miss discount, then the probability of this playing out is a lot less. However, sometimes it may be worth still taking. It's really up to you on your risk tolerance. But for me, if I want to see an A++++ setup, this is what I'm looking for. Okay. And I'll go over a couple examples, but this is basically the entire premise of it. Now, this inversion here, it can be anything between the 1, 2, 3, 4, or even 5 minute chart. So any inversion between the 1 to 5 minute, I'm looking to enter on. And whichever one is the highest time frame, let's say we have a 1 minute bearish fair value gap here in this leg, but we also, if I switch to the 3 minute, have a 3 minute bearish fair value gap, then I'm going to have to wait until the 3 minute bearish fair value gap gets inversed, gets closed above before I can enter this trade. That's just part of my rules. That's just how I keep a higher win rate, because a lot of my trades are 1-to-1 or 1-to-2 risk to reward. So if I want to be profitable getting mostly 1-to-1s, then I'm going to need higher than a 55 to 60% win rate to make this even like decently profitable, right? However, my win rate is around 70, sometimes 80%. Most of the time it averages around 70 to 75. So that's just by using these rules here that I've laid out. But yeah, I just wanted to get into that. So we're going to go over an example here. So these are the 2 most recent continuation setups I've taken. One of them was this week, and this one that I'm going to show first was from last week on Friday. And they're just continuations toward all-time highs, because we've been super bullish recently on NASDAQ. Markets at all-time highs. No reason to be bearish, for the most part. So we're going to go over it, and I'm also going to introduce the idea of SMTs. If you don't know what that is, it's basically just using the S&P 500 along with NASDAQ. Both are futures contracts. And these are correlated assets, so they move the same. If you look at these charts, they're kind of like moving the same. They're trending similar. However, there's slight divergences in price where one asset will take out a low or high and the other one just misses it, seemingly. But because they share liquidity, if NASDAQ misses this low, like here you see, this candle here at 8:55 a.m. on Friday was swept by the S&P 500 here, 8:55 a.m. It was swept by ES. But NASDAQ seemingly missed it. However, this was still another confluence for reversal. So there's that to keep in mind. That's part of why I also longed here. So let's just go over this trade from the start. Basically, market opened here at 9:30. We got a move down. We got an open low at 9:30 on both assets. We had a unfilled 5 minute. You see these green boxes here. These are fair value gaps on the 5 minute. I'm on the 5 minute chart here. And we had price displace into it. We didn't close below any of these fair value gaps. And then we got this nice wick out of this SMT here. ES took out this 5 minute intermediate term low right here, and also this 15-minute fair value gap here that I marked out on the 15-minute chart. So ES, I didn't mark a green box out, but we do have that 15-minute fair value gap there, as you can see. ES came and took that out, and also took out, okay, didn't want that to happen. Also took out this 5 minute intermediate term low. NASDAQ was obviously the more bullish asset because we didn't go that low. And then we also formed this, if I rewind a little bit, let me go back to here. As you can see, we have a fair value gap here. and the next candle closed above this bearish fair value gap, this red box here. This candle closed above it. I market entered there. I put my stop at the SMT low there, and I'm targeting all-time highs because our drawn liquidity is obviously higher. We have these highs stacked right here, and market has been super bullish. Why would you be shorting all-time highs? So that was just an obvious drawn liquidity for me. I put my first target here for my break-even point. The next candle moves higher. We move our stop to break even. So at this point, it's a risk-free trade. And then the next 5-minute candle takes out all-time high, and my final take profit is there. So very, very simple trade. Hopefully that was pretty simple to understand. And that caught 49 points for a risk of 30 points. So 1 to 1.6 RR on that one. Okay, so pretty simple. Let's move on to the one I was talking about with Monday. It's going to be up here. So this one was pretty similar. I'll show you guys in a second. So let's go on the 5-minute chart. Let's rewind here. So this was also around New York Open. I don't know why it zooms in like that. Okay, so this is also at New York Open. Where is... Here we go. I want to see Monday. Where is Monday? All right, whatever. So we're just going to look at the NASDAQ chart then. So on NASDAQ, we opened here at 9:30. Obviously, we had this bullish 5-minute fair value gap get tapped into. And as you can see, we have been moving higher here. And then we have Asia highs and all-time highs stacked along with these highs here. So we had all this low resistance liquidity stacked here. And then if we go down to the 1 minute, we had these candles here. It took 3 candles to close above. Once it closed above, I entered long there. And then we went straight toward Asia high. I personally closed at Asia high on my trade, but you could have left this running to all-time high. However, it was Monday, and I usually don't like to get too greedy on Mondays or Fridays even. But you could have left it to all-time high, and that would have been a good trade. However, I was pretty happy with my Asia high target. Still got about 30 points out of that one. So as you can see, it's pretty simple if you can get this down. I would recommend, if you want to explore this theory, this model here, backtest it a lot. You really only need to understand a few ICT concepts, which include premium and discount, fair value gaps, inversions of fair value gaps, draws on liquidity. So it's pretty simple, but if you guys have any questions on this at all, feel free to DM me, hop in the Discord, talk to us, and I'll be happy to answer any questions. But yeah, hopefully that was helpful, and I'll see you guys in the next video. Peace out.